Welcome to the July 13th, 2018 Income Millionaire Insider Update. Let's immediately get into the stock market reversal radar here, which of course we can see does not look a ton different than it did 2 days ago at the last update. Again, sort of bouncing around somewhere near the top here, at least in that very short term of happy emotions. And again, like we said just 2 days ago, and we still believe and have so far been proven correctly, because that slightly longer moving average, that other person in your household that takes a little longer to move from a trough of fear to a peak of happiness, that person is still somewhere, still about on the 50-yard line. So has more room to run up, which is why we think the stock market can keep going up here over the next week or so. So with that said, let's get right into something that is near and dear to our heart, and that, of course, is one of our missions. And one of our missions is simply to bring all of that oil and gas to Canadians and Americans that won't live without all of the infrastructure, technology, goods and services that they absolutely demand, won't live without, that require oil and gas in order to create them. So therefore, one of the companies that we're looking at is Kinder Morgan. The ticker is KMI. Kinder Morgan is the largest domestic transporter of petroleum products, natural gas, and carbon dioxide. They also own the only pipeline that serves the west coast of Canada. We don't like uncertainty, so it's a great thing that just last month here, Kinder Morgan, they finally put an end to some of their uncertainty, all of the uncertainty surrounding the future of the Trans Mountain Pipeline expansion project up there in Canada. By selling the entire system, they sold the whole project to the government of Canada for $3.5 million. Not a bad payday. Not only does that sale remove a huge burden of debt from Kinder Morgan, but it will also significantly beef up the company's balance sheet in the near term, thus lifting another weight that has been holding share prices down, in our opinion. In using our brains to get a better deal, in this case, we want to own Kinder Morgan stock outright because we want to collect the 4.5% dividend that the company is paying here, with the stock price at about $18 a share. So step one is we're slowly accumulating the stock itself through the use of time stops, which is simply deciding how much cash in total to set aside to use to buy Kinder Morgan stock. And in the near term, we can put 20 to tops of 25% of that money to work in the near term, meaning buying the stock. That does two things. That gets us partially invested now, so if the stock price takes off, we're invested. It also leaves 75 to 80% of our money remaining to buy more Kinder Morgan stock at lower prices in the future, should emotional investors drive the price down. We're going to continue using our brains to get a better deal and sell a covered call option on the Kinder Morgan stock that we're buying, and take advantage of all those folks out there that are pouring out of their local trading academy today on this Friday afternoon, thinking they know the future, so they are bidding up the prices of these call options because they are buying them, and we are more than happy to sell them these call options. With the current stock price just under $18 a share at this very second, let's sell a September 21st, 2018 covered call because it's the closest expiration right now than we can get to 60 days. We'd be happy to sell our Kinder Morgan stock at $19 a share if it gets called away. Why? Right? Because we'd make almost 6% on our stock in only 2 months. Who else is making 6% on their stock in 2 months? If we have the chance to sell our stock for 6% every 2 months, we're potentially making 36% annually, right? So again, 6% every 2 months, potentially annualized here, potentially 32% annually. Selling that $19 strike covered call, it instantly makes us about $20 for about 2 months, which again, annualized here could potentially be 15% on our money annualized, plus the 4.5% annual dividend for just holding the stock. So potentially all in here, annualized, we have the ability to make up to 55% a year, which is fantastic. So let's see how we would actually make those covered calls. So here we are on that KMI options chain. We are looking at the September 21st, 2018 expiration because that is the closest expiration to 60 days. And we wanted to sell that 19 strike covered call, which on the far left here, and let's zoom in, you can see we can get, with a nice tight spread there, we can get $20 per covered call here, per contract. And if you would like to sell more covered calls, by all means, you may please do so. That is up to you. But let's start the transaction here by clicking on the bid side. So it pops up here. Yes, there is no spread, so we're just going to go for the instant making of the $20. So let's do that trade. The pop-up box comes up and says, yes, we would like to sell one KMI September 21st, 2018, 19 strike call and instantly make $20 here. So here we go. We'll hit transmit. And there we go. We just instantly sold that call, that KMI September 21st, 2018, 19 strike call for $20. And again, all in here between the dividend, between the option premium that we just made, between the potential gains on our stock. Should it continue going up, annualized here, we can potentially make 55% a year. And that is a beautiful thing. Hope you enjoyed this July 13th, 2018 Income Millionaire Insider update, and we'll look forward to seeing you again soon. Take care.